All right, it's 4 o'clock on Thursday. It's time for the Real Estate Happy Hour.
Everybody loves this. You know what? It's 2019. Happy New Year.
Happy New Year, a little party in the USA.
It is a party in the USA.
It's always a party on the Happy Hour.
I didn't even know it.
And in fact, guess what we brought back?
Today we've got a little second self from Atlanta, tropical guava sour, citrusy, refreshing. Tropical guava sour, huh?
I mean, it sounds like you let my 9-year-old pick out the flavor.
I know.
Sour. Everything's sour now, even beer.
I let Miley pick it out.
Nothing like a good sour beer, right? From Atlanta, you said, right?
Yeah.
Hey, good stuff, right?
Pretty good. And I tell you, it's one of the leftovers from the last couple of weeks going to Piggly Wiggly. I'm telling you, Piggly Wiggly is stocked.
Hey, it is. Piggly Wiggly's making it. Hey, they're big downtown. I know. And
we've got the one right there next to Mount Laurel off of Highway 41.
Yep.
And they've got a lot of craft beers in there. They've always had a huge selection. And I'm thinking, it's amazing that there's so many craft beer companies. And how are they all making this much money? Is the economy doing that well?
I think they're hoping.
Beer?
I think they're hoping.
That's crazy.
I read that article in the Wall Street Journal a few weeks ago talking about the craft beer, and they're saying we're hitting a plateau where some are going to make it, some aren't, and that's why they were saying buy Anheuser-Busch stock, because if this market turns real bad, people love to drink when they're sad.
Yeah,
and they go cheap.
And a lot of stuff looking at research for the show today, right before we came on.
Oh yeah,
a lot of people talking about recession. Looking at Apple's numbers today, the market taking a dip. Definitely.
Boy, it took a bath. It didn't take a dip.
It took a bath.
Did.
So one thing that's going to be cut out in a slow economy is going to be craft beer, huh?
Well, craft beer. I mean, nothing. Tropical guava sour, but yeah, and it's kind of like ice cream. Ice cream will do well. Buy stock in Brewster's if they sell it. I don't think they do. They probably don't. But anyway, let's. Hey, we're gonna have some good stuff on the show today, aren't we?
Look, it's a Happy New Year. So this is our second year.
Second year. The
Started
Happy
last
Hour.
year. I mean, it doesn't take much to first show into the new year. You're
2 years.
Yeah, established 2018.
Yeah, well, hey, woo, we're a big deal.
That was a long time ago.
Big deal.
Long time ago. Today we've got we're going to talk about rates. We've got the difference in pre-quals versus pre-approval.
That's right.
5 reasons you should not sell your home by owner. That's a big deal.
There's a lot of reasons, but we narrowed it down to 5.
A lot of good information. Then we're going to hit on some stocks. We've got one more college football game left, so let's do it.
Hey, I think you know where I'm headed on that pick, but we'll leave it at that with Alabama and Clemson. But hey, let me tell you this. How was your New Year's? Good?
Oh, very good. Very uneventful. Probably in bed by 9 p.m., so pretty boring. So I apologize if that's not exciting, but
well,
whatever.
we had an adventuresome. We had a great time. Went to some friend's house and just had a fantastic time doing that, and then got home that night. And it leads us to our next subject: what happened that night. I'm one of these people that when I'm bored, I clean, right? And with a 9-year-old, it's so tough to clean when she's around because it's like I'll put 2 things in, one's coming right back out.
Yeah.
And I was cleaning after we got home from our friend's house at midnight, 1 o'clock, somewhere in that range. And I started noticing on the wall of our basement. And I said, there's something wrong with that sheetrock. So I played with it a little bit and I looked down. And sure enough, I found what appeared to be termite dust or the shavings of termite. So, of course, by the time my wife wakes up the next morning, I have taken all the sheetrock down on one whole wall myself, removed it. Isn't that crazy? I mean, pretty good, huh? It's easy to remove, right?
Yeah.
So anyway,
take down.
So take all this sheetrock down. I look down there, and apparently the person before me, there wasn't active termites by any means, but they just covered up the problem and never fixed it, right? So now I'm fixing it. So if you're my future buyer and you're watching this house, then I'm gonna be taking these out and fixing
good shape. That's crazy.
But the key there was I started thinking, is my termite bond, because we're so used to being on autopilot with everything, that we switched to that Centricon system. And when I switched to the Centricon system, did I get on auto payment or did I not? And I'm telling you, there's no worse feeling than New Year's Day when no one's open.
Yeah, not knowing.
Yeah, but the great folks over at Knox Pest Control, being in this industry, I called the guy at home on New Year's Day, said, just alleviate me of my concerns. Luckily, I had it in there. But it was food for thought I wanted to mention today is, this is a great time to go back through all of your, I don't want to say subscription-based services, but renewal-based services.
Yep.
Make sure they're in play.
Home warranties, termites.
Absolutely. Pest control.
Alarm companies.
Alarm companies.
They won't let you forget, right?
But, no. Because that's not necessary. But the thing is, these termites, I mean, imagine if the damage had been active and all that.
Yeah.
I would have been out of luck.
Yeah.
And luckily we weren't, so we're going to be good there. But
well, Donna Gammon, Happy New Year. Thank you for tuning in. We're excited about another year of the Real Estate Happy Hour. So next thing up is what? Rates?
Well, we got some rates to talk about. How are we?
Man, so we're not moving. I mean, we're improving a little bit, okay? All of the negativity in the stock market is, money's going to leave the stock market and go into bonds, which is going to help rates, okay? Because the more demand, price goes up, the yield is inversely related.
Right.
So the yield is going
spread,
to go down,
right?
okay? So when you got money pumping in, then that means rates are improving. Right now, we're not much difference over last week, but 4.5 on a 33.99.
Not bad. A little bit better.
Yeah, a little bit. So back into threes on a 15.
And I know everybody is watching, but we're almost a full point from the time you were on the cruise ship.
Yeah, it's crazy.
It was almost 5%.
Crazy to think about. December of 17, right? We're at 4%. We touched 4.75, touched 5% last year. Now we're about 4.5 or so, and looking at another maybe 5.5 next year,
yep.
5.3, or this year. I'm sorry. So it'll be interesting to see how much rates move. I'm hoping they don't move much. There's just a lot of talk about the Fed. They're tightening their policy, what they're saying. Are they moving too quick? So I'm hoping that's going to calm down at the next Fed meeting, and we're going to level off here. But I've been saying that for a few weeks.
Are refinances just completely out of the picture?
Refinances are they're not a whole lot of them. I say it's definitely possible to find some benefit in a refinance still. It just depends on your situation. But they're not nearly as much the business.
One thing that I wanted to ask you in this segment here is about our good friends over at the the rocket ship.
Yeah.
Up in Detroit. They I had a buyer client ask me this week about it, and they play a lot of marketing games with their product. Mm-hmm. There's no question about that. And they have a new product where they're advertising that they'll lock you in for 90 days.
Yes, they will.
So talk to us a little bit about that and kind of what the pitfalls are of that program.
I'm telling you, the devil is always in the details, right?
Right.
Now, this product has been out for about 6 months at least that I know of. And when I first saw it, did some research, did some digging, went online, I answered all the questions, I got to the end, and the interest rates were comparable.
It's slightly higher, though, right?
Yeah, they were actually.
That's how they're paying for it.
The interest rates were a little bit higher, but they had 2 points. On some of these programs, they had 3 points on ARMs, but they had 2 points on a 30-year. So if you're locking in for 90 days, you're paying 2 points up front for a rate that's not that great.
Oh, so you're paying 2 points to get the 90 days.
Yes.
So I think the big takeaway here is that 90 days is not a free 90 days.
Yeah. Oh, yeah, absolutely. So the deal is only as much as you know about it.
So your break even now on that loan is way out there now.
It depends, but I mean, most people don't assume those fees, okay? So they hear that your rate's locked and your rate's secure and you're going to be fine to go shop for your house, but you don't know everything that you're paying for. You don't know what you're agreeing to up front.
You don't know.
Yeah.
I'm shocked with them. And now, Mark Carlisle just said he expects mortgage assumptions, people assuming other people's mortgage will become more popular. What are your thoughts there? Because it's very limited in what you can do, though. You can't just go into an FHA and assume somebody's FHA loan.
Right. You would have to go in and assume the loan. And basically, there are some, if anybody doesn't know, there are some loans that are assumable. Typically, you're going to find it on the government loans, but you're going to have to make up the difference between the price you pay and the loan balance, which is going to be the tricky part. Because a lot of times these loans are low down payment loans,
okay,
right?
Yeah, right.
So if you're looking at that loan, that means
equity.
you have a low down payment. Now, if you're buying a house that is, you've got to make up the difference between that assumable loan and the purchase price.
Oh, yeah.
That means you're putting a good bit of money down.
Right. Yeah. So it'll be in limited situations where the spread between we can't have paid down a lot of equity for that to happen.
Right. So if you're coming into it, you not only have the mortgage insurance associated with it, but you also got that larger down payment than you normally would be on a regular FHA loan, let's say. So I would think maybe get a little more popular once the spread gets a little larger. So let's say once we get up into that 5.5, 6,
start seeing it,
and then we've still got some loans at 4, then maybe it's a little more popular.
Right. Gotcha. Gotcha. All right.
But we'll see.
Yeah, well, let's talk about the difference between so often you get the pre-approval letter and you get a pre-qualification letter, and the words are interchangeable in common parlance, but in reality, there is a difference. That is
certainly there is, and a lot of people have this question on are we pre-qualified, are we pre-approved? Now, pre-qualification is basically just a phone call. I say pre-qual is a phone call, right? We've got a credit score, but we are just talking about you have given me numbers. So you tell me that you make $70,000 a year, let's say. You tell me that you've got $20,000 in a savings account. So I run that through. It all checks out. It all looks good on my end. We're pre-qualified because I haven't looked at your pay stubs.
It's the first step.
Right, but I haven't verified anything. At a pre-approval, that means I've verified. I've looked at the bank statements. There's nothing weird there that we need to dig into and figure out, where did this $10,000 cash deposit come from, or your pay stubs. Okay, so you're actually paid commission, and you've only been there for 6 months. Okay, that's different. Now you may be on schedule to make $70,000 a year.
170.
But the way that you're paid could create more questions. So
right.
The pre-approval is after we've actually dug into all those things. We've dug into income, we've dug into your assets, and we've verified that information. And now we're pre-approved. Now, I've been in the business for a long time, so I'll issue pre-approvals based on what I see. Okay. Now, a lot of companies are moving toward they'll take the whole file into underwriting, and we can certainly do that. I don't employ that very often because I typically just issue.
You have some of the best underwriters in the business, that's for sure.
Yeah, so we can do that too. We can run the whole file through underwriting before you even write a contract. So there's the big difference between pre-qual and pre-approval. Pre-qual is more of a casual conversation.
Yep.
We're pulling credit, so we know.
That's what we're doing on the
is.
Weekends, right?
Yeah.
Right. You just hey man, can you look at this person?
Yeah, that sounds like you'd be fine.
I can do it.
Yeah, but then we dive in. We get tax returns, bank statements, pay stubs, W-2s. We get everything from you, blood sample,
urine sample,
firstborn child, all that stuff. And once we have all that, then we can.
Well,
you're pre-approved.
What about, sellers often want to have a definitive answer to this. And they say, look, I've never met one lender that's willing to say because we hear sellers, I want 100% certainty that they're going to qualify. You can never provide that 100% certainty, right?
Yes.
Because there's intervening forces that come into the process.
There is something that could happen and something that has happened. It's kind of like, we have all these documents that we have to sign, and some of them are silly. Well, it's because somebody did something stupid one day. It was to know we have a form for it. But anyway, so there could be certainly a perfect situation where the buyer goes and does something silly at the last minute, and now their loan is not good anymore.
Well, and silly means buying it, getting a truck, going to Rooms to Go, and getting. Here's one that I saw last year. They'll go to Rooms to Go and apply for credit, but they didn't buy anything. And so then they come to the mortgage loan officer and they say, but I didn't buy anything. But you just blew your ability to buy the house because you now have a line of credit that's extended to you.
Yes. But I would say, though, that we can get all the documents, get it through underwriting, and do that whole process. Yep. And that's a little bit more certain because an underwriter has looked at it, so that makes people feel a little bit better. And we can give a guaranteed pre-approval where we'll put our neck out there and say, yes, we have had everything looked at. Certainly.
And you'll guarantee the mortgage for 1 year.
Yeah, no. And certainly there are situations where people could do silly stuff and mess that up. But
people doing silly stuff. For the
most part, no. But that is really the first step, is getting that pre-qualification, getting the pre-approval before you get out with a real estate agent looking at houses and doing that whole thing.
You're not doing yourself a favor, by the way. We see a lot of people say, I'm just going to go look and then I'll get with someone when I'm serious. The problem is you need to make sure you're with the right lender, right? Because if you're just banking on going to the rocket ship mortgage company, you're making a mistake because you haven't had the opportunity yet. I'm saying even go through the pre-qual with them, because guess what's going to happen when you do that is you're going to find what he talked about is you'll be finally able to see the fine print and see how bad of a deal it is, right? Because if you wait till you're under contract and you're emotionally connected to a house, you're going to be in a position where you may make an emotional decision.
Yeah, and speaking of that, another thing I've seen are pre-approval letters that will have the terms and the interest rate, but not the fees associated.
Shocker.
So I always thought that was interesting. How can you disclose that I'm approved for this loan without telling me what I'm going to pay for it?
Well, you shouldn't. It's like car dealers, right? I mean,
Yeah.
really. But you guys, the other thing too is that what I love is you've never sugarcoated. A lot of lenders in the industry will sugarcoat and lowball things like taxes and insurance that are different by every property, right? And so they'll just put a low number on there so that when they go comparison shop,
Yeah.
guess who's lower?
Because it affects your monthly payment and your closing costs, right?
Absolutely.
It affects your cash to close and your monthly payment. So if I change the taxes and insurance, then that makes my payment look lower,
Yeah.
right? So this deal's better.
Absolutely. It's so much better.
And then I can come back on the back and say, well, oh, those are taxes and insurance. We don't control that. I mean, you shop for your insurance. The taxes are what they are. I mean, I was just estimating. I was just guessing.
I mean, that goes on all the time.
Yeah, it does.
And it drives me bananas. And the good thing with somebody like David is that you're an engineering-minded person, and you hate when numbers are off anyway.
And I hate the smoke and mirrors. I love options. I love providing the options. I hate the...
Oh, you like stock options.
oh, yeah.
Yeah. Oh, he loves them.
But, I just love providing people the information, giving them options, and, not hiding the things like how much does this cost, or, what are the points associated with this interest rate, or, are my taxes really going to be a lot more than that?
Right.
So anytime anybody's surprised in the process is not comfortable.
Talking about surprises, one thing I wanted to bring up as you in that area is, I don't know if you knew this, but January 1st, all the hospitals now that accept Medicare and Medicaid patients, I believe, have to be transparent on their pricing. So you could shop technically for your gallbladder transplant. I don't know.
Now and who's going to do that?
Now,
right?
yeah, that. And can you imagine, do you really think they're going to make
Who's
it
going
easy?
to stop and say, this is killing me, but let me shop it.
I'm looking,
Let me shop it.
and these guys are not going to make it easy.
Yeah.
Because it's going to be, well, if this, if that.
Yeah, and see, so they're going to put in roadblocks.
Oh, no question.
To make it
But
more
we're
difficult.
compliant.
Yeah.
But anyway, moving on to 5 reasons that you should never sell your house by owner. FSBO, as we say. So if you hear us use the word FSBO, that means for sale by owner.
Man, and I will tell you, just before we get started, I have this happen to me every now and then where they will come to me and say they don't want to use a real estate agent. So who ends up playing the part of the real estate agent?
Well, yeah, you do. Or the lawyers. I talked to Ryan Sparks, local attorney here in Birmingham, and, one thing he can't stand is he's there for settlement purposes only. He's not getting paid to guide you from start to finish.
Yeah.
And he certainly isn't representing you.
Yeah.
Right? Here's the thing. People forget the enormous amount of money that real estate professionals, y'all have them, we have them. It's called errors and omissions policies that protect us, right? So that we can work, that we are willing to take risks so that we can protect you.
Because there's a lot of things in the paperwork. I know we're going to get to it, but there's a lot of details
Absolutely.
in the process, in every step of the process, that could get missed. And that's
right.
where the errors and omissions come in, right?
Right. I mean,
for mistakes or things that are missed.
If you're going to a professional, David does not have a license to practice real estate. So why would you go to him to write your contract? And why would you go to me to get your mortgage?
Doesn't make sense, right?
I approve everybody.
Yeah.
It's all good.
Yeah.
It's all Ben's money.
Send it in.
Yeah, that's right. That's right. Anyway, but number one is exposure to prospective buyers. This is a big one, and it's bigger than you think. And it's really the real estate community at large, right?
Yeah.
And they're very protective. Now, I'm not ever going to go on here and say that realtors don't show FSBO houses, right?
But they don't.
But they don't.
Look, it's true. They don't do it. You are cutting down the number of buyers, the number of eyeballs that are on your property, right?
Absolutely. You certainly are. And 95% of all home buyers, according to the National Association of Realtors, were looking online when they bought a home in 2018.
And, some people think it might not be fair, because realtors aren't showing it. But the truth of it is you're trying to avoid paying them the commission to do their job.
That's right.
To sell the house, right?
And to be honest with you, it took, for our team, who were very well exposed in our area, but that didn't happen overnight.
Yeah.
I mean, you remember when I didn't know anybody.
Yeah.
And now it took thousands and thousands of dollars. It took 1,000 clients. I mean, it took a long time. So, and that's what you're getting, especially if you get a team that's experienced down the road. You're getting all they've messed things up and all that in the past. Yeah. They've learned from things, and you're getting experience.
Yeah.
That really does matter. And people say, how much does it really matter? Well, from a marketing standpoint, it matters greatly because it's one thing. Okay, sure, you can have showing, but are you showing it to the right people?
Well, yeah, I think the marketing standpoint, I think negotiating wise, and I think when you run into a problem, okay, whenever you run into a problem, you want somebody to help you out. You do not want to be on your own.
Well, going back, look what happened with the termite issue, right? The relationship that I had within the industry allowed me to get somebody on the phone on New Year's Day, that otherwise was not going to answer their phone.
Exactly.
Right? It was a relationship-driven issue. Imagine if I had a real problem, right? A good, experienced agent will be able to get you answers on the weekend. I called you one time. You were not answering your phone, but you answered mine, and you're sitting in Maui with your butt in the sand.
Yeah.
Right?
Yeah.
So it matters. Number 2, results come from the internet. You do not, if you're not in the industry, it is hard enough for us in our business to fight Zillow, Trulia, Realtor.com, all these guys, right? A lot of us spend thousands of dollars to establish a presence out there and to also hire people like, for me, it's Allie and Julie that help me stay out there with these listings. And not only make sure we're there, but that we're in the right places where buyers are.
Yeah, and I mean, buyers want to do almost everything on the internet nowadays, right? I mean, they want to look at the house. If they could walk through it virtually, they would. If they could get a touch and feel for the whole the spatial range of the whole place, they would. So they're doing so much on the internet. Your house has to have good representation on the internet, and other agents seeing that out there as well.
Well, it's kind of like, I remember growing up and I hit my head on the dock one time, and my uncle said, "Don't take them to the doctor. I'll stitch it up. I know what I'm doing. I did it in Vietnam. I got you. Get me some, fishing wire and some other stuff." I mean, the fact is he could do it.
Yeah.
There's no question.
Yeah.
I might be infected.
Do it.
I don't want him to do it.
Right.
But the idea is he could do it, and maybe it turns out okay.
Exactly.
But I would have saved money.
Yeah. You would have saved some money, but you need a professional.
But one thing I thought in here is that we see a lot of times, those red yard signs that say for sale by owner? That's all they do.
Yeah.
Only 7% of home buyers bought their home from a yard sign.
And there will always be that one person that says, "You know what? I could do it on my own. I've got traffic on my street." And that's true. You can. You can.
Yep.
And you're going to be in that 7%. Yeah. Congratulations.
Absolutely. And just pray that it sells, right? All right, number 3, there are too many people to negotiate with.
Too many people to negotiate with, and any time that you've got a disagreement, it's going to be you versus them. I mean, the real estate agent, yes, they are an interested party, right?
All right.
But
aren't we all in our jobs?
They do this every day, though. You're negotiating like one of your largest purchases. You're in love with this thing, or you're selling something that you love, right?
Oh, absolutely.
So you've got these emotional ties to it. The real estate agent is not going to be as emotional, and they're going to be able to negotiate with experience about whatever the problem that you have, right?
Absolutely. So true. And, just think about, you're a home seller and you're selling it. The buyer is going to be, buyers are crazy. All right? I'm crazy as a buyer because I want, right?
Yeah, you want a
That's
deal.
That's a normal deal of a buyer.
You want every repair fixed.
I want everything.
You want allowances for the carpet.
Everything. And there needs to be a buffer gap in there. And quite frankly, I need it. You need it. We all need it more buying. I need somebody to tell me the truth.
Can I get the lawnmower?
Can I have the lawnmower?
All of it.
Can I have the TV?
Yeah, that's staying, right?
Look, what about the home inspection? What drives me nuts with realtors, though, too, in this, and I'm about to tell you is, a lot of these realtors will hand them a list of home inspections and go, pick one, they're all good. Now, that's not true. It couldn't be, numbers-wise, right? But I think we hire realtors to narrow it down and say, who served us well, right? And that's, if your realtor's not willing to do it, you're the wrong one, because they have relationships again. And look, you might say, hey, he has a relationship business-wise, but that's how business is done, right?
Yeah. And so what happens with that home inspection report? The buyer's going to take it. They're going to see all this stuff. They're going to ask for the world. If they have an agent to represent them, right? They could probably pick and choose what is smart to ask for, what is recommended. And then as the seller, they're coming at you with all of these requests.
Absolutely.
Whereas your real estate agent could step in and negotiate with the other realtor and say, hey, here's what really needs to be done. These are big items.
We can show empathy where you can't because you're too emotionally involved.
Yeah.
I need to be able to hear that person.
Let's do these things, and let's, leave these things alone and get the deal done, right?
Well, and I always say, going back to relationships matter when you hire a professional, is that, we've had I've always had, since we've been in real estate for nearly 12 years now, I guess it's 12, yeah, is you will, if you ever screw my client over, I promise you will never. Now, David's been with me from the very beginning, and the main reason is, on top of being really great at his job, the reason he's still here is he hasn't played the monkey games to screw a client over. And that just doesn't happen because a lot of people will just take the money. You and I know that. Yeah. We've had opportunities to get into relationships with people that pay a lot of money. It's not worth it, because what matters is the fact is that I can trust that person to get the deal across the finish line in a ethical manner.
Yeah, and you want to take care of people. You don't want to take advantage of people. You want to make sure that they're getting the best deal. So you got to remember that even though the real estate agent, people have this perception, they are doing their job, but they're also really trying to take care of you and help you.
Why wouldn't they? Why wouldn't they? Right?
Yeah. And if you don't feel like they are, then you probably have the wrong person.
Yeah. Well, the number of FSBO folks has dropped from 19 to 7% over the last 20 years. Now, that leads us to the number 4 area, which is FSBOing has become more and more difficult, which we don't have to belabor on this point, but it's everything we just talked about. It's so much more paperwork.
Yeah, it is a lot of paperwork. Just going through the contract alone is a lot of stuff to read, a lot of stuff that you may not understand just reading the contract.
Have you broken federal law? You have a little house in Homewood and you've not issued the lead-based paint addendum. By the way, when you don't have it signed on a house built before 1978, you're violating the law.
Yeah.
Right? Now, I think it's a little silly, the whole lead-based paint addendum, but it's still breaking the law. Now, you're not going to prison, but...
Well, I think everything we talked about is in that point. Number 5 is a big one for me. That people think they were going to make more money not using an agent. That they're going to make more money selling it by themselves. And the funny thing is 9 times out of 10, the buyer that sees that for sale by owner sign in the yard, they want a deal too.
Absolutely.
So buyer and seller can't both get the deal.
No. That's the problem. Sellers go ahead and price the discount into it, and then buyers go, I want more.
Yeah, I want the discount too.
Absolutely. And then, one of the biggest stories that you can take home from all this, and I don't know the exact website, so forsalebyowner.com, one of the big for sale by owners, New York City couldn't sell his place, went for sale by owner for over a year and a half, right? And lo and behold, he finally gives in, gets with a realtor, and sells it for I don't know the number, but $500,000 more. Now, we're in a different market, by the way. That's $20,000 here. But $500,000 more than he was getting because even though it's unethical and stuff for people to blacklist listings, the reality is if you're not enticing somebody to come, they're just not going to go. Now, we took a different approach with that in building our business, that we would embrace these people because guess what? As you saw, 7%, only 7% were going FSBO, and a lot of those don't even sell. So I want to be there when they decide to list.
Yeah.
And let me just say this. Anybody is nuts if they don't want to save money. If your realtor can't show their value or their agent can't show their value, don't use them, right? They got to show value. They can't just go out there, and they need to be, consulting with you, being an advisor to you in the process, which you're really good at.
They need to be helping you with the transaction. They need to be helping you understand the contract, helping you understand the home inspection, helping you understand the mortgage process. Even the seller, you don't understand why the mortgage takes so long. The appraisal part of it, when that comes back, or, if there's lender required repairs. There's just so many things that, again, there could be plenty of deals that go,
there are so many that
you sell on your own and don't have a hitch. But
Well, you talked about the lender required repairs. What happens when that happens? Guess what happens? I've had many a FSBO call me and go, hey, man, I know we didn't use you, but like the appraiser's saying that it won't appraise. Can you give me some comps? Mm-hmm. Right?
We've got one right now.
That's rude.
In the office. No agents involved, and we're having trouble with the value, and so who's going to step in?
Yeah. Mr. Arnette, good to see you.
Yes, sir.
The old man.
There he is. Hey, buddy. So I think that's great information. Definitely things to think about when you're selling a home and trying to do it on your own. It's difficult. So moving on.
Yep.
We've got the
fun stock market.
Is the stock market, and I tell you what. So 2019, we have started off at roughly about 23,000.
Yeah.
I think about
at least we made it back.
About 2,500 on the S&P. Now today, lost 660 points.
For reference point, this is January 3rd, 2019. So
yeah, lost 660 points. You know, the crazy thing to me, one of the things that stands out to me is that these huge losses, 1,000 point moves.
We never saw these swings in this numbers.
Yeah, right. So this is something new. And Apple today, revenues are down.
They're blaming China.
Revenues down because of sales in China. Well, apparently the economy in China is weaker, a lot weaker than ours is right now.
Right.
A lot of people talking about the Fed tightening and how that's going to affect our economy. That they are basically choking things out. Mm-hmm. So a lot of speculation out there. I think the stock market, I think it's going to go lower. There were some numbers. 2350 on the S&P was a scary number that Art Cashin of UBS Securities was talking about.
Art Cashin.
Yeah.
Good guy.
Yeah.
I know Art.
So 2350.
I don't know
I didn't
Art.
pick up the number that they threw out for the Dow, but
how much?
2350 was the number for S&P. If it goes below that, beware. So I would say that there's definitely some fear out there, right?
There's a lot of fear out there, and that's one of the problems. I heard some pundits say talking about Trump. Is got who got the credit? He got the credit on the way up. Well, he took credit,
yeah,
and rightfully so. Because one thing to remember is we are still way up from where we were when he took office.
Yeah, and I gotta tell you, look, I've talked to a couple people about this, and you have not lost any money until you sell your position. You haven't gained or lost any money. So if you have 10 shares of Microsoft,
that's right,
and you haven't sold them, then you haven't gained or lost any money.
And we talked about it last week.
Just if
you're in solid businesses,
hang on.
We talked about it before the show about Cellogen, right? Pharmaceutical.
Yeah, Celgene killed
you
last year.
Celgene, right? It killed you last year. But the problem is, in the long run, they're a good, solid company with decent leadership. Right? In that they have real products that help real people that solve problems for humanity. I mean right. That loosely.
Right.
But they're not a speculative company. So had you held on to it.
Yeah, there were options. But
there were options, and bye.
Hey, win some, you lose some.
That's right. Sorry, Mr. Arnette.
But yeah, so I mean, I would think right now you just hang tight. I think if you're, we've said this for a couple of months. If you're planning on investing more, maybe hang on to that, and later this year you got a better chance.
Discover Bank, Marcus, which is a one of the online banks. It's affiliated with what's a big bank that deals with all the IPOs. Not Morgan Stanley, but the other one. But anyway, Marcus is affiliated with them. But then you got Capital One 360. The problem with Capital One 360 is that they tend to have higher, to get the highest rate, you must have $10,000, $15,000 in them. So I like the ones like Discover Bank that have nothing, but are giving you 2% off the top. The other thing I would encourage everybody to do is start tracking everything. So you see where your money's going. Like there's an app called Personal Capital. I'll see if I can put a link down below. Track your net worth and those type of things. Now, you don't even have to have a net worth, right? I mean, a big one to track it, because you need to keep score once in a while, not just praying. Because this is a good time to take note of it, because things are moving down, and we need to know where we are so we know how to improve.
Yeah, and if you know what's going on in the game, then it shouldn't bother you. I mean,
if you're broke, you know you're broke, because you're not drinking this beer. Now, either am I. He bought it. So, you're drinking Natty Light, like Trista said earlier, right?
Yeah. But, I mean, you got to know the score of the game. And right now, we're not in a bull market. Stocks are not raging. So don't be upset when your accounts go down. Just hang on to them.
At the same time, you get into a good fund. Vanguard, Fidelity, Schwab. The three. If you're with one of the three big guys that are the low-cost folks, I like Schwab and Fidelity a little bit better than Vanguard's having some customer service issues as of late. But any of those good funds will
Yeah, and that does remind me, don't make any investing decisions based on what we're saying at all.
Yes. Well, especially him.
Yeah, especially me. So,
especially on options.
Yeah.
Yeah. Hey, but the good thing is you were going to be rich had they hit.
But if you had an option in Alabama,
yeah, you'd be really, really rich.
You would be paying off big time, which brings us to Monday night. Natty, speaking of Natty Lights.
Natty Lights.
The Natty Championship game. Alabama -6 versus Clemson.
Boy, oh boy. Look.
Freshman quarterback.
Look.
The frosh.
The kid's good.
Hey, dude, he's like 6'6".
Yeah, he's good. He really is. We're talking about Clemson's.
Now, you know what? To be honest with you, he has not jumped off the page impressive for me, but he is 6'6", and he does win football.
He gets that
games.
first down.
He's not going to win Monday, but
he will not win Monday. Alabama is going to steamroll get to the fourth quarter and win by 3 touchdowns.
You know what? I think Alabama was more excited.
Not 3 touchdowns.
In
Let me
the
go
first
18
half against Oklahoma. Now, granted, they let off and they did what they needed to do to win the game. But they were ready to kill Oklahoma.
I agree.
They did in the first quarter.
And I'm not so sure that Clemson can score. Let me say this. Oklahoma can score fast against anybody.
It'll be a good matchup, and Clemson will come out and fight back.
They will fight back, but the problem is it's going to end badly for Clemson, and they lose by more than 18.
More than 18?
18.
Wow.
This line is wrong.
And Nick Saban, who's the quarterback in the fourth quarter?
It will be Jalen Hurts waving.
Which quarterback wins the game?
Jalen Hurts. Well, we know Tua's going to be Tua's going to be on the field, but not at the end. Jalen Hurts is going to be in mop-up duty, and they're going to because it's going to be the swan song, all that jazz. I'm sick and tired of it as an Auburn guy by hearing about Jalen Hurts.
Doesn't he have another
but he
year?
has such a great story.
He's got another year, I think, doesn't he?
He does, and he's saying, you know what? He learned from Nick Saban on how to lie to the public. I'm not leaving. I promise you, I'm not leaving. Like he did with the Dolphins, when he was coming down.
No, quit talking about Saban lying to the public. That's rude.
Yes, that's exactly right. Well, Saban. Oh,
it's rude.
Can he just quit already?
No, I don't think he's going to.
All right, hey, everybody, remember, we're a big deal, right? We're kind of a big deal? We're kind of a big deal. Kind of a big deal.
We're working on a 2019. I think we're going to become a bigger deal. We're hoping.
Don't forget to check out the podcast edition of the show, wherever good pods found. Apple Podcasts, Google Podcasts, Stitcher, Spotify. We're everywhere. We're on YouTube. Just, hey, get over to our Facebook page. Just search for the Real Estate Happy Hour. You'll find it. Punch that like button.
And here's to a great year. Happy New Year, everybody out there.
Go Tigers. Happy New Year. We'll see you next week.
See you guys.
Bye.